All right, welcome to the live stream today. Hey guys, looks like we got Apple's earnings on deck, and it's a late lunch for me, so apologize for the 3 o'clock start. Normally try to do it at 12:15 to 12:30. Today's Apple earnings, big event. Market. Let's take a look at the macro really quick. We have kind of a lot of things down today, right? So markets mostly down. The Qs are doing better than the spiders. Um, Looks like the spiders are still in this downtrend. We had the banks issue yesterday, and we had Powell and all that stuff. We won't get into all those details, but it looks like the spiders are down almost 0.7%. So almost a percent. It looks like it's trying to hold this 403 level down here, and looks like the VIX spiked to 21 today. I tend to look at the VIX as a trend here to see what's going on the daily. Broke out this morning, and then it's pretty much been kind of double top this morning and coming back down. So there's your double bottom right here where the VIX spiked today. We're still in this downtrend. I really think the SPY is really heading back to that 400 level, about 400, and then lower, maybe 390. But I think it all hangs in the balance tonight with Apple earnings, right? So let's get right into what I'm looking at today. Actually, first let's check out the consensus or the estimates. So they're expected to come in around $1.43 tonight, which is you know downward revision. Actually, the next 2 quarters, and then revenues looks again like they're projected to have lower revenues. As option traders, we don't really tend to look at a lot of this stuff. I look just really quick, kind of like what I look at, and again, this isn't meant to be a long video. It's more of just a trade, earnings trade, how option traders will look at earnings and what I look for. Obviously, I'm looking at this big magnet up here at this level, that the 175 level. We've got some gap down in here. It looks like we broke somewhat of a trend on the daily. And it looks like it's headed back for that 160 level, but you never know. Earnings can be good tonight. The expected move, let's flip over to Thinkorswim. You can find this in any of your platforms, Thinkorswim or Tastyworks. Shout out to Tasty Trade and Tom and Tony and the gang. I'm still using Thinkorswim. You can look at to find your expected move. Actually, the platform shows you right at the top, near earnings. So this would be about a $6 move expected for today. You can also look at the straddle prices at the money straddle. That's another way of doing it, right? So if you take tomorrow's expiration, 1 day to expiration, you look at the 165 straddle, and it's about a $7. You take the average of the bid and the ask. Typically, I just look at one number. So it's about a $7 move. And then another thing we can do is within the platform too, we have our probability ranges up here, one standard deviation. And then you can also use another one, which is actually fairly common, the 16 delta. If you take your platform and you want to show delta. So in my case, I'm showing applied volatility probability out of the money in delta. That's what I use for trading. So the 16 delta around here 17 would be 157 on the low side, and looks like I filled my strangle, and 175 on the 14 delta, about 53 cents. Not a ton of vig right there. So not a ton of volatility. And then also as option traders, for when I'm playing earnings trades, I typically like to go out 2 standard deviations. So just make sure people are in the if you're a chat, if you wanted to chat. I go 2 standard deviations, that'd be a $12 move, and there's not a lot here. So what I did, guys, was I'm taking a look at actually what just filled was I'm looking out to June, and I'll come back to short term July and June and May. Actually, May and June. I'll come back to that in a minute on put calendar. But let's do the strangle first since that filled. So I filled this. I filled two of these strangles at 410. So what I did was I went out to June expiration to the 175 call and the 145 put. Let's take a look at the chart on why I chose those. We just talked about it, that 175 being the top at this level, and that's actually two standard deviation moves within this expiration tomorrow. So clearly the stock can go higher from here, but I think a lot of people are expecting, and like we've seen, and again, I'm just kind of not giving away secrets here, but I can't jam it all into 15 minutes. But when we look at earnings, we've had Google, Amazon, we've had, various earnings plays, AMD now. And so you tend to look at what's going on with other companies in the group, and a lot of, and actually this year there's been a lot of inside moves. That means, if it's a $6 expected move, it's kind of been within that move. There's been years or seasons or times where stocks are going to be way above that or way below that. So I'm expecting Apple to kind of stay within that $6 move. And even if it doubles at $12, I don't expect it to move much higher. If it's incredibly strong, and something you got to understand here is I'm actually hedging a little bit short here because I'm hedging a longer portfolio. So a lot of us, if you're in your 401k or you're already long stocks, and Apple goes up, you're going to do well anyway. So I want to be a little neutral to bearish on my trades here. So you can see where Apple's trading. I traded that 175 call, which is that basically almost a $10 move. So not quite two standard deviations. And then I did if they get crushed, I'm going all the way down to that 145 level. And so that brought me to a nice $4 move for that strangle. And this strangle happened to be for two of those, you're looking at a buying power reduction about $4,800. So for one of those, you're about $2,400 in order to make $400, right? So this is a good trade for me when I look at the ratio of buying power reduction to return. But this is out to June, just keep in mind. Now there will be vol crush on this. There will be vol crush tomorrow. And so if it stays within that $6 move, and especially if it goes down to that 160 level, which I would love to see, then I can actually take some of this trade off or just kind of rest comfortably that I've got now theta decay. As option traders, we love that theta decay. As sellers, the other idea I have for more of the short term here, and let me just reset these values. So I've got a put calendar, and I don't play a lot of put calendars. So this is going to be new to me. I've got a 65 cent. Actually, right now it's bidding 72. So I've got an order to buy 40 of these. What's called the May expiration, selling the May's 155s, right? So a calendar is, if you don't know what a calendar is basically like a spread, but it's using 2 months and it's using a single strike. So if I target the 155 strike, I'm selling the front month, which is the May 19th expiration, and I'm buying the further out expiration of the same price. If the price is different, it would be called a diagonal. So complicated terms, but in the end, diagonals are really popular. I trade those a lot. It's a little bit more advanced because you have to set up the trade a little bit. You have to spend a little bit more time on the trade, understand your risk, and you have to be able to exit these trades pretty quickly. So they're a little different than, but I think they're sometimes a little safer than butterflies, and also just spreads in general. A lot cheaper than spreads. This would be when you want a highly directional move. In this case, I'm targeting that 160 level. And you're not going to, again, as option traders, we don't collect the maximum on the trade. We try to collect 50% of the max profit, just good practices. So if you think about it this way, I'm putting up for 40 of these, it's a huge amount of buying power reduction. It's a $2,500 trade. But if I got this strangle in here, I'm offsetting that by $800. Now I can, and if that's with it, if it stays within that 175 range. So I could have gone and spent a little bit more money, but I want to be careful to try to stay within, that 1 to 3% of your total portfolio, so you don't blow out on any one trade. So we're trying to be good option traders in here. I'm trying to collect in here $800 to put towards this uh calendar, this put calendar, right? So I'm targeting that 160, and I'll probably take it off at 50% of the move. Now, if we take just a look at the components, if we were to build this from scratch, right, just to show you guys, let's just build it from scratch, and then that'll be it for the video because I wanted to be short today. So we're looking at selling the May 19th 40 155s, right? So that's 15 days to expiration. It's not a weekly expiration, so that's kind of good. It's popular. There's going to be more volume. And Apple is very liquid, so you don't have to worry about volume and stuff like that with Apple. It's one of the most liquid securities in the markets besides, SPY. So we're looking at the 155 May puts. We're going to be selling the 155, so that would be $1.32. And then we want to buy the June 2nd. So if we just look at that really quick, what that looks like, because I'm a very visual person, maybe you are. So that's $1.34 in premium, right? And we're gonna buy or sell 40 of those. So we're saying we want to collect $1.34 times, $5,300 for that. But we also want to buy now the June 2nd, which is 29 days. So we went from 15 days to 29 days. We buy ourselves another 2 weeks. And we want to also buy the 155s, a calendar. And we want 40 of those. This is how you would construct that trade. And so that is, you're spending now 80 to buy this. And so the total debit to buy this trade would be this is where the 65 cents or 70 cents right now, that it's bidding. So, and so this is a very directional trade, so the idea here, by the way, is tomorrow at expiration, if the stock is above that 155 level, which is actually 155 is really good move. It's I targeted that level because it's 10 points. I don't expect Apple, even if they disappoint, to be down 2 standard deviations. And the reason why is because they're going to announce a buyback and they're going to try to sugarcoat it. So they're actually, and you got Warren Buffett put in there, and you got just tons of, nobody's selling Apple, right? If anything, there's an opportunity to just buy more. And it's done really well, but at the same time, it's moved up so high. I think people are targeting this. They're really targeting this area here. If they really disappoint, they could slice through this thing like butter, which is fine. Which is why, this is a bearish directional trade, but just wanted to go over the components for a minute. So on the short, on the short put, you're going to make money above that 153 number, which is almost, like I said, 2 standard deviations. So you're good there. And if you were just doing this on your own, you would be you'd be obviously making a lot of money, but you could probably never afford to do this 40 trade by yourself. It would be $90,000 for buying power reduction. There's a whole nother video on that if you want to watch it. They take 20% of the strike price minus the actual price. It's about a 20% of the stock price, right? And then you multiply that by 40 contracts. That's a lot. So you could never put on a $90,000. You don't want to put on a $90,000 trade in this case. But we want to offset by the buy, which gives us all that juice to the upside, or to the downside, I should say. But we've got another couple weeks for expiration. So the idea here is that that put expires worthless, and then it's basically the call now that or the put, sorry, the put expires worthless, but the long put that you have now in that 160 range is going to give you some good opportunities in here to take some profits. Like this is right in the sweet spot of that second derivative, that inflection point, probably around the 155 number. So if we can see 155 in the downside, there's your inflection point, there's your maximum profit. Now, these will probably be, when you see these theoretical curves, they're almost never theoretical in terms of this now will vol crush tomorrow. So these curves will be about half. That's why I'm doing 40 of these. So if I got a $5,000 like halfway mark here. If I can squeeze out of this a $3,000 profit down to the 158, let's say, level, if they have bad news, then I'm golden. Honestly, what I think will happen though, I think Apple will do okay. But again, I think what'll happen is it will move up. Uh, it'll move up after hours, and I'm kind of hoping or kind of planning. This is my strategy. My strategy is that I'm targeting a lower Apple by the end of close tomorrow, and then next week and the week after. So kind of how Nvidia has started to fall off from its highs. Kind of the same thing. At some point, these things are going to have to come in a little bit. We've had such a big run targeting this 50-day moving average. If it slices through that on really bad news, you're really down to this 152 level. The 200-day moving average, these are all really good numbers to be in here. And then if you look at that strangle targets the 145 all the way. Break evens are at 140 in June. So even if Apple just has a really bad, comes out and just gets killed by China and gets killed by their PC division or whatever it is, this stock will be fine. The market will sell off. And there's other problems that we're going to have, but the stock will be fine. But I'm actually just looking at the way Apple trades earnings. I fully expect it to either fill this little gap here and trade as high as, let's say, 168 tomorrow, but then start to fall off. If the market just starts moving down lower in after hours as soon as they report, and it doesn't move up at all, it means that traders are pretty much just selling the news anyway. They don't even care what the news is. So that's another factor. So you can tell by the action. If we get a 6-point rally up or even 10-point rally up, there's a chance that this thing will just open tomorrow unchanged or a little higher within that $6 move. But if it's down 6 or 12 on earnings, then it's pretty much lights out tomorrow, and you're going to see pretty much people are running for the exits, especially on a Friday, because markets don't bottom on a Friday. So that means people are going to start to worry about Monday. And this is kind of the last general to stand, if you will, right? So that's all we wanted to really talk about today on the Apple trade. So thanks for tuning in, and see you soon.